Has it ever occurred to you that the positions whatever you had taken in the market or whatever you had thought a day before was right, and only you exited the position much before you could have made a larger potential profit just because you heard someone on the television, probably a CNBC TV 18 or some expert panel, some random telegram guy, or some advice which you saw on Instagram or YouTube that he had a contrarian position and you exited halfway. Well, that's what we call as the noise in the market. And in today's session of learning technical analysis, we would be understanding what is a noise in the market and how do we reduce this so that we can trade with clarity, with a clear focus on what you want to achieve. Hello, this is MohiithShankar. You are with me in my channel Trade Smart with Mohit. What we do is that we bring out some weekly educational videos on trading, wherein you can sit at the comfort of your home and learn one concept every week. So this would be a video of a long duration, so you have to stay focused so that you can get to know whatever I am telling it to you today. So how to reduce the market noise and trade with clarity. This is our topic for today. As you can see, wow, what is the noise? There is too much of information. Now we know that there is no dearth of information with internet. Especially you have all the social media platforms which are bombarding with the news. A research analyst, probably he wants to sell his subscription. He's giving you the ideas. All of them may be right or all of them may be wrong. We are not debating on who is right or who is wrong and whom to choose among the influencers. All what we are saying is that you should have your own analysis when you sit to trade. What you must be doing to cut this clutter of noise, because whenever the price moves, there are two components associated within any price for that particular day. One is the underlying trend itself and the other is the noise around it. The problem is not with too much of information what we have these days, but the problem is the confusion what it creates within our minds when we sit to trade. So in this video we will learn how to slowly eliminate one noise after the other, so that the trading doesn't confuse you, or you know that even if you make loss, it would be out of your mistake and not someone else's guidance. So too much of information, either the charts or chatter complete for attention. Like you turn on the TV, probably you are using CNBC TV 18 to follow the news, or any CNBC Avaz or any Z Business News, any news for that matter. There are four analysts who are sitting on the trading desk who are giving the advice. One says Nifty is probably weak today, you might have to go short. The other says I would be buying at these levels. Now what do you do as an individual trader or as a retail trader? Well, the idea is everyone might be right. The only thing is that they might be looking at a different time frame. One person might be looking at a time frame of 5 minutes. The other person might be looking at a time frame of 15 minutes, 30 minutes, or 1 hour or 4 hours. Now, what is the right time to choose? If you are an intraday trader, you can choose a higher time frame. Say, suppose if you are using entry, if you are using 5 minutes, choose a 15 minute or 30 minute or 1 hour candle for analysis of the trade, for understanding which position you need to be on, and then take 5 minutes for the entry. Too much of information. Well, the other way around is when I began my trading journey, I used to have a TV next to me and I used to have the TV running throughout the time till 9:30. So what I used to do, whenever I hear an anchor be positive about some news, I used to try, okay fine, if I was short in the market, I would exit it prematurely, thinking that okay fine, this is a good news, probably the market might factor in. Little did I know that all the prices would have discounted this news much early than to my anticipation. People, there is a saying in stock market, you buy on rumors and then you sell on rally. That's exactly what happens in the stock market. Have you ever imagined that a stock comes out with good numbers and then the profit booking starts? Because they would have the institutional investors or a smart money would have accumulated these stocks for probably from 3 months itself, from last quarter itself, in the anticipation that the results will be good. So what happens next is that on the day of the results, you get a good news and this stock just, it doesn't go up, or it remains flat, or there is a profit booking which results in the markets to give up the high price, whatever it has reached. And if you have gone long, thinking that the market would take you much higher and it is a safer bet to bet on a company which has good results, then you'll be quite surprised that the market will make you hit your stop loss. So these are things you need to avoid. The best thing what you can do if there is too much of information is mute the TV. You can have the CNBC TV 18 or whatever news you are following at the background, you just have to mute. And this comes by discipline, because I always tell you the price discounts everything and every bit of information which is freely available in the market. If we think it's an efficient market hypothesis, this is the fact that you don't need the news to trade. If you're a technical analyst, the price tells you what you need to be doing. So cut down the news, stop following people whom you don't trust, or at least don't avoid conflicting news. There are too many opinions, conflicting calls from social media. Pull your conviction apart. What do I mean by pull your conviction apart? Say suppose you have bought a stock at 100 rupees per share, or any index for that matter, anything, even if you're long in the market. Now what happens if you are long and you are making 101, 102, 103, you're sitting on gains of 3 rupees. Then suddenly some random guy on the channel tells that this is the time to short the market. What do? You start doubting your own self-analysis. You might exit your position prematurely. Probably that stock would rally another 10% on the same day, or 5%, we don't know. So what is happening here is there is a confusion created in your own mind because of someone else's opinion. How do you eliminate that? Just don't listen to it. Be deaf and dumb when it comes to external news. That's the only way out in this market. Too many indicators. Now, I have seen many traders, even my students, when they come to learn, there are probably about 50 plus indicators, and you can develop your own indicator. If you are quite experienced in the market, you can come up with your own indicator. Every indicator takes price as its base point, and then you build on it. Price, volume. So these are the things which you take and you build on it. Now, just stick to 3 or 4. That's all you need to trade. Just keep it very simple. There is a saying that if you have a postcard the size of 4x6, and if you are able to write all your strategy in the postcard within the size of 4x6, that's the right fit. That's the right strategy. Too many indicators creates too much of confusion, and you will not be able to take a decision. It will paralyze your decision on any given day. So keep it as simple as possible. That will help you. That has helped me in my trading journey as well from the past 10 years. That will definitely help you. Emotional reactions. Now, what happens is that I have seen many of the traders start trading in the first 15 minutes, lose the money, then take another trade, revenge trading, just to make up for the loss. How hard it is. After one trade, just shut the PC and then go out. It can be one trade, or it can be the percentage of your capital which you have decided to lose on that particular day. Understand, there is only one thing which is under our control when we sit for trading. I'm talking in terms of intraday trading. One is the stop loss. We have control only on our stop losses. We don't have control on the profits. The better you realize this, the much better it will be for you. So always approach the market with a plan. I always say trade your plan. Plan your trade first, and then you trade your plan. That's the best thing to have. Say suppose, what if there is no plan for me on that particular day? Then don't trade. If you have seen my monthly profit and loss statements, out of 20 days, probably I trade about 12 to 13 days. Rest 7 days, I don't know what to do. I just don't know what to do. So when you don't know what to do, you should not be forced to enter into a trade. Now, why is it happening that you are forced to enter into a trade? Because you have probably made a loss. You are bound to take care of the expenses of your home. Probably that might be the reason. Probably you have left your job for intraday trading. Always understand, if you begin your journey as a trader, always have a stable income which can support you. Once you have the stable income, it will give that mental peace and concentrate. It will help you focus on the strategy which you want to develop, or probably it will not force you to take a trade on any given day. So that's the few things which you need to understand. Fear and greed are the worst enemies of any trader. We are not grappling or probably we are not we have to become a better person in these two terms, fear as well as greed, and you need to have a patience and a lot of discipline, a hell lot of discipline as a trader. These things can never be taught. I can't teach you fear. I can't teach you how to control greed. I can't teach you be disciplined. That you need to inculcate in yourself. So trading success comes from filtering, not reacting. Yes, we do react to the price which has moved, but don't react to the news, because every news would be factored in the price itself. So, what is market noise? I told you it's a short term price movement that does not represent the real trend. So, there is an underlying trend when a price moves, and then there is a noise surrounding it. So, you need to eliminate the noise and understand what is the market is going to tell, what is the market is saying about the particular trend on one day. Imagine if the market, when you open an intraday chart, probably at 9:15, you are tempted to take a trade because just you heard that US and Iran have violated the ceasefire and the markets are falling down. You don't know how the markets would react. The markets are always forward thinking. Understand this, the markets are always forward thinking. You might be thinking of just one day, but there is a smart money, there is an institutional money against which you need to fight and win back your trades. So that becomes very important when you take a trade. Always think like an institution, which is the maximum pain point, wherein probably the people can square off all their positions and just go, which is the position wherein there might be a short squeeze. So that you need to identify and then trade accordingly. Random candles. Now, I always say that if you have put a, say, suppose you have put a normal candle, a 5-minute candle for trading, there are too much of noise around the market. Now, what do I do? A sharp single spike of the candle with no follow through. Probably you enter into thinking that the resistance has been broken or the support has been broken. Always understand, support and resistance, it is not a single point or a single line. It's always a zone. And for a trend to break that support or resistance, it needs to hold at least 3 candle period above that price. What do I mean by 3 candle period? Say suppose if you are a day trader or a swing trader, if you are a day trader, let the price hold at least for 5-minute, 5-minute candlesticks. Then if it's still sustaining above that price, then probably you can enter. Or else reduce the noise by having a moving average. Now, moving average, although it is a lagging indicator, it will give you less false signals than just the price. Have a price, combine with a moving average, probably, then you can get a right, although the signals will be less, but at least the chances of you making a loss on account of false breakout would be reduced. Fake breakouts, we just spoke about. Intraday volatility, sharp swings within the day that fade by the close. Now, how many times we have seen that the market has risen in the first half till 12:30 like a rocket? The angle is very steep. Always tell that if the angle is very steep, probably the market may not sustain. Like, for example, how many times have we seen that the market has moved like this? Probably this is, I'm only talking about intraday. It has risen very sharply, and then only in the later half, second half, say suppose if you don't exit your position, the market might come tumbling down. Now, why is this happening? Either the market may be manipulated, especially if it's on an expiry day. So how do you trade the volatility? Only way you can trade the volatility is by having a strict stop loss. Have a strict stop loss in your mind. Don't deviate from the stop loss. Don't shift your stop loss when you have already decided this would be the stop loss which I'm going to be trading with, because this is the only thing which is under control, not the profit. And one more thing is that you need to have, if you are getting a feeling of FOMO, fear of missing out on this trade, it's okay. Check your identify your risk reward ratio and accordingly take an entry. Say suppose your entry doesn't warrant you to take entry, whatever you have written on the paper doesn't warrant you to take a trade here, then avoid trading that day. It's still okay. Don't chase the market just because you have missed on it. So don't ever do that. Now, what are the sources of the market noise? We have know that there is too much of media, there is too much of social media, trading groups, and firing all at once. Everyone wants to grab your attention so that they can increase their TRPs, or probably they can push in their own information. There are too many indicators or emotional decisions, I've already told you, and lower time frame distractions. Now, when you are trading a trade, especially in intraday trader, please avoid 1 minute candlestick. because if you are a scalper probably, and if your trading style is that of scalping, probably you take 10 to 20 trades in a day, that might suit you. But if you are someone who wants to make consistent money in the market with less stress on your own head, then please come out of this 1 minute candle, because there are too many signals. The lesser the time frame you choose, the more false signals you get, and the chances of you making mistakes only increases, only amplifies. The problem with too many indicators are derived from price. Understand this. Now, all the indicators, no matter what, you choose RSI, you choose MACD, or you choose VWAP, volume weighted average price, any indicator, stochastic oscillator, probably you are checking MACD. If you layer 4 to 5 indicators, it will only confuse you. First, go back to the drawing board, go back to the basics. Have one, probably not more than 4 indicators. I would always say have one indicator, probably check one price action tool if you have, probably one moving average. That's all you need. Probably an RSI and an MACD or an exponent, do double EMAs crossover strategy along with a VWAP. That is all you need. Just two or three. The optimal for me, according to me, which has worked, 2 to 3. Nothing more than 2 to 3. Stacking too many indicators only will create confusion in your mind, and you'll be wondering, okay, fine, let me wait for the other indicators also to turn bullish. Understand, all the indicators are, since they are derived from price, they are almost all lagging indicators. The price is only the reality. Now, how do you choose? Well, it comes by experience, but keep it very simple, as simple as to 2 to 3 indicators. That's all you need. You don't have to go in search for the strategy in YouTube. In fact, when I say what do you want to learn, would you want to learn the course or the setup, I get more people coming for the setup. I get very few people, very rarely 1% of the people interested in the complete course. Understand this. I always give this analogy when I'm taking class to the students. You have completed 4 years of engineering, probably then you get a job, and for you to prove yourself, it will take some time. Here you're not willing to give at least, probably I would not say 1 year, at least 2 to 3 months of your time learning about the stock market. You want to make money right from the day one. It will not happen. That's the reason 98% of the retail traders lose money, because they don't have a structured approach. They don't have a process. If your decisions are process oriented, don't say, suppose you have step 1, you have step 2, you have step 3, and you have step 4. Don't just directly go to step 4. I am telling you, understand, learn by yourself. If you don't have the comfort, or if you don't have the money, or if you don't have the inclination to join a course, that is fine, absolutely fine. Now with AI at your hand, probably with more number of free material, you can learn by yourself. If you're so interested, you can learn by yourself, but always follow this process. 1, educate yourself first. Second, get your things right. You should not put the money what you don't have in trading. In the sense, don't loan the money and but put to trading, because that will create more tension, that will create more emotional trading. And then have a stable income. Always tell, have a stable income, so that your earnings or your day-to-day expenses should not depend on trading profits or trading gains or losses. So if that is not there, you will be a much more better decision maker than with all those problems. So always have a process oriented approach, and I always tell you, maintain a trading journal so that you can write down your mistakes every day. The focus on price, action, and structure. I would generally propagate this view, because my strategy is always on price and action, because that's all you need. You don't need 100 indicators, you need to see the price. Okay, fine, if this 24,000 is a psychological barrier, why would I be going long at 23,990 in the anticipation that the markets would move 24,000 in few minutes? That is not needed. Always wait. Don't preempt a move. Never preempt anything in a stock market. Let the market show you what it wants to do. Let the market show you the strength, and accordingly act. You don't have to take a decision much before the market has already proved what it wants to do. You have to wait. Waiting is good at times. If you take a decision and then it will hit a stop loss. The entire day you'll be wondering, and then again it moves accordingly whatever you are planned. The entire day you'll be wondering, why did I make an entry early? Everyone makes a mistake in the stock market. Understand this. The only thing which is protecting us from the rest is the money management. If your money management is right, everything falls in place. Time frame decides your reality. I always tell you, when if you're intraday trader, say suppose if you are choosing a 5 minute for your entry, I would never speak about 1 minute. Please give up that 1 minute. For me, I'm a trader who takes only one trade per day, and I'm very happy taking just one trade per day. For me, the consistency and the process, me following the process is very important. Now, how did I arrive at 5 minutes or only one trade per day? This is through trial and error. I have made losses when I used to take more than 2-3 trades. Have you observed that? Probably, in my case, I would say you, the days which have been extremely profitable are the days where I just had taken one trade a day and stuck to my strategy, no matter what. No matter what, in the sense, I'm not telling you once it is a stop loss, you still stick to your strategy. That doesn't make any sense. If it hits your stop loss, just close the laptop or the trading system and just go out for half an hour, 1 hour, and don't return back again, because you'll be tempted to take again a trade, which might only add to the losses what you have already made. So that makes your journey to come back to break even more harder. The break even more harder. So what is the direction you should be taking, ideally taking? I always tell you, take 3 time frames above your entry time frame. If you are a 5 minute person, if you take a trade at 5 minutes or 3 minutes is also okay for an intraday trader. Probably choose a 15-minute candle, a 30-minute, and a 1 hour for analyzing the direction of the market for that particular day, and accordingly take an entry using 5 minute. See the bigger trend, the context, and the bias you trade with. Always I tell you, don't be biased. Don't enter into a trade with your own personal biases. Now, what do I mean by personal biases? Don't be bullish or bearish in the market. Don't have extra hopes in the market. You're not wedded to a particular stock. You're not wedded to a market. What you need to do, you just react to the price, whatever it is telling you. The price or your strategy is telling you to short. No matter what you think, the market might do, you just have to go short. What is the one thing which is saving you from going absolutely reaching the state of ruins is your stop loss. Understand this, get this. Probably in one session, I would be talking too much about these stop loss, because that's where you differentiate yourself from a professional trader with a person who is just gambling in the market. Lower time, only use it for the execution. Higher time, you use it for the analysis. Do not allow small candles change your bigger view. And whenever if there is a confusion between a normal candle, you have entered, there is too much of noise, you don't know one candle up, one candle down, you don't know what to do. Shift to Hikanashi. Now, Hikanashi in Japanese means average. Now, when I say shift to Hikanashi, this is only once you have taken an entry. Hikanashi doesn't give you entry or exit. It only tells you whether it reduces the noise. Go back, check whatever app you are using, have candlestick and have Hikanashi side by side, and see whether Hikanashi is reducing the noise or not. Then probably you'll be able to realize that yeah, Hikanashi does reduce your noise and makes your life more simple than sitting in front of the system and glaring at the screen, thinking that why the prices are moving like this haywire. There would be volatility in the market because the markets are volatile in nature. So shift to Hikanashi once you have entered a trade using the normal candles for analysis. Then shift to Hikanashi to hold the trade. Exit the trade, again see candle, again have your target, everything should be set. Whenever you sit for trading, there are 3 things you need to know. One is stop loss. By default you would know, because that's the maximum loss you'll be taking home that day. You have to define your stop loss very well. Ideally, it should not be more than 1 to 3% of your entire capital on any given day. Say suppose in one day you are taking 10 trades, then your stop loss becomes more smaller. But I'm talking about the stop loss for the entire day. Whether you're taking one trade or 10 days doesn't matter. 1 to 3% of your entire capital, it is okay. What it should be risk reward. Again, I will tell you in the next topic, but today we would only focus on the noise. Otherwise, this video will become quite lengthy. So reducing the noise, trend, dominant price is moving in direction higher highs and higher lows. If whenever the market is making higher highs and higher lows, understand that the market is structurally very strong. It is in an uptrend. The reverse, what would be the reverse? Lower highs and lower lows. Support and resistance, levels where the prices has reacted before. Market always has a memory. When imagine that the market goes to 24,000, there is a short which is happening, and then it comes to 23,500. There are support level it has been respecting from past few days. This is a range bound market. Whenever it comes here, probably you might be better off taking your profits. At least don't take a fresh long trade here. Wait for the market to break that resistance. Now support and resistance are interchangeable. The whatever was resistance before becomes your support in the next trade when if the market sustains above it. Breakouts, decisive moves beyond the key structural levels. For example, I told you 24,000, it has to hold above it at least for 2 to 3 candles, whatever you have been following. Then probably you can take a trade. Strict stop loss just below 24,000. Then take a trade. If it hits, exit the day. It was not a day for you. Volume or momentum. No matter how beautiful the strategy is or how effective the indicator is, if it is not supported by the volume, it might be false. Like volume means the number of trades happening at that particular point. Then what is the buyer interest? Are there more number of buyers here? A renewed momentum to buy. The buyers are more enthusiastic now. The supply zone. This is the supply zone. Is the supply getting exhausted and there are more buyers stepping in because they think this will break today? Or any, so you always check with the volume helps you in deciding whether that break, whether has it broken resistance or support holds or not. Always confirm that with volume. So have a checking list. Now when you are sitting for trade, understand, make yourself very clear. Is the trend very clear to you from the beginning? No, then probably you might have to evaluate again whether the trend is clear. If the trend is not clear, whether it is trend can be up, trend can be down. So trade accordingly. Is price near a key level? As I told you, the price being 24,000. You should wait. Probably you should wait. Don't take a trade out of FOMO. Is the risk defined? Have you noticed that have you come up with a defined stop loss? Have you come up with a defined stop loss? No, then probably work on the stop loss. The stock markets will be there 365 days a year. It is not going anywhere. Take 1 or 2 days off. Define your risk very clearly. What is the risk appetite? How much loss you can take without losing sleep? That is the right risk for you. Now, I can't tell you to take, but generally, as a rule of thumb, as a convention, we always say 1 to 3% is good enough. More than that, it is suicidal in nature. No matter how good your strategy is, everything comes down to your position sizing. Is this my setup? Always trade according to your own setup. Don't follow the news. Don't follow someone else's guidance. So I always tell you, although even though I might be giving you calls as a research analyst in the future days, in the coming days to come, I always tell you, encourage you, have your own setup. At least you would know where you are going wrong. It is better to regret, make a loss and learn something out of your own decisions rather than taking a call on someone else's decision and end up you don't even know why the trade was taken. There is no learning outcome of it. But if you take a trade, you make a loss, you learn something, you make a profit, it's good enough. You learn something. Market is a place which it makes anyone humble. Understand this. Trade with a setup. Plan your trade. What do I tell? Plan your trade and then trade your plan. If it is not there in your trading setup, don't trade that day. It's okay. Come back the next day. Market always gives you a chance to make money. But market gives n number of reasons to lose money every single day. So don't fall into that trap. Okay, fine. I need to trade every day. It is not needed. There is a Pareto principle which we always say 20% of the efforts results in 80% of the 20% of the action results in 80% of the results. Pareto principle. Probably if you have seen, probably 20% of your trades would have brought in 80% of the profits. The thing I mean to say is that focus on what you exactly know on one particular day and trade those days which you are very comfortable. It's not that you know for sure. We never know. Any single day we don't know what the market is going to do. If a person says I can predict what the market will be today or probably tomorrow, I have seen people on YouTube professing that they know what the markets will behave 6 months from now, 1 year from now. That is stupidity. Or probably they know much more than all others do. That's okay. But we as normal human beings, we don't know that much. So what do? Understand which days you want to trade. If the market is presenting a good structure according to your setup, just follow that day and probably make money and then stay quiet. The biggest noise is your mind. There is nothing more than that, because when you take a trade, when you see the price fluctuate, your fear and greed kick in. The fear of losing the money. Understand, when we sit for trading, there is one thing which we know. More than the happiness of making money in the market, the fear of losing the money. Probably would have lost the money yesterday or day before, and you have felt that pain. That pain is more than you getting into profitable position and making good money on that particular day. What it does, as soon as you see some, probably you see 100 stock moving into 101, you just exit the position because you want to probably savor that 1 rupee feeling, happiness feeling on that particular day. Probably the trade would have taken you 103, 104, we don't know. The previous 3 consecutive days or 2 consecutive days, you might have made a loss. So you don't want that feeling to recur again on the third day. So don't have that. Your risk reward should be defined. Your risk reward at least should be 1:2, or anything more than that is excellent. 1:2, 1:3, 1:4, excellent. Now, how do you hold yourself? How do you train your mind? That comes by practice. That comes by your rule book. That comes by discipline. You need to follow day in and day out. FOMO, always tell you, fine, the markets have rallied like this and you are just a mute spectator. Till that time, it's okay. It's okay. The markets always come down. The markets have you seen any market rally like this? No, it always corrects. Use Fibonacci retracements. I always tell you, use Fibonacci retracements. Probably it is old, as probably many centuries ago, the Fibonacci had come up with the Fibonacci sequence. What is the Fibonacci sequence? 0, 1, 1, 2, 3. Right? So understand what is the Fibonacci. Use that for retraction. Don't enter a trade at the highest point, or don't short the trade at the lowest point. There is always a bounce back or a pullback which is imminent. So wait for the bounce back or a pullback to happen. Revenge trading. Now this is the most important thing. Either you first trade 15 minutes, you have taken a trade, you have lost the money, and then you want to make the money in the same market on the same day. My friend, that is not going to happen. It has never happened with me. I have been lucky few days wherein I was able to recover, but again, I blame myself for taking a second trade, because my strategy says I need to take only 1 trade a day. Just limit to 1 trade a day. There is no urgency of you to take second day. The markets are not going to go down completely tomorrow. No one is putting a bomb or NSE or a BSE building or any Dow Jones building or S&P. No, markets will be there. So you have enough chances to prove yourself, or probably not prove yourself. You can make decent money. You cover up the losses. You can make decent money. You need patience. You need discipline. Probably other than these trading setup and everything else, forget. You have a patience. Develop the patience. You don't have the discipline. Develop the discipline. How do you do it? Write everything in a book. If it's not on the paper, it doesn't exist. Or write it down. First rule, okay, fine, I will not watch television, or probably I would not have a news channel on live bombarding with me with all the news of that day. Remove that. Second, don't follow. I should not be saying this because I would be myself giving a research analyst, opinions, and but that's okay. Don't follow research analyst. I would not say research analyst. Yeah, don't follow someone whom you don't trust. Now, how does the trust develop? Trust develop when you see, okay, fine, this person is telling the truth or not. That you need to make up your mind. I can't be a judge for that. So need to recover your losses. Don't take too many trades. Just understand everything. Everything is linked. Don't be that greedy mindset, or probably you need to make up your losses that very same day. Never do that. It's not going to happen. It will only increase the pain, whatever you are having it. Imagine one day you have lost 10,000. I'm giving very small numbers. 10,000. In the second trade, again, you want to recover the 10,000. You see 5,000 extra loss. You exit your position again to see that the market has actually gone in the direction of your second trade. Then you say, oh my god, I missed this trade. Again, let me take a trade. Again, you make 5,000. Instead of 10,000, you have now made 20,000. And the next day, you need to recover this 20,000 to feel good, or probably to break even. So that is not needed. Awareness of internal noise is the first step to trade with discipline. I always give more stress on patience and discipline and the power of education. You invest in yourself, you read, because reading empowers you, and at least with knowledge you will be able to tell, you would be able to take an educated decision whenever it comes to trading. It need not be trading, it can be investing or anything for that matter. So why we fear is something which we don't know. We fear something which we don't know. You don't know what an indicator is, go check in Google what an indicator is. You don't know what is a VWAP, go check. Now you have so many AI tools, it will act as a teacher and it will teach you everything. Only thing is that do you have the patience to learn? Find a good teacher and learn. Experienced teacher probably is an intraday trader like me. I am promoting myself, but that's what I want to. I need to promote myself. You need to find a trainer who has been a trader by himself. Don't follow the advice of someone who has been teaching you, who gives you the levels, but has he been trading for himself? No, then probably he's not the right person. He doesn't know the fear of the pain of losing money. He is only making money out of the probably selling the strategy. Understand this, I always tell this. If the strategy was so good, why would I sell it to you? Wouldn't I make money by myself? Why would I sell it to you? But people find it hard to believe, but in fact they call me also, they send me a message also, they want to know the strategy. They are not interested in learning a systematic approach to build their own strategy. That is absolutely wrong way of thinking when it comes to intraday trading. Always have a professional trader approach. These are the 4 steps. Identify the trend. Don't know the trend. If you are not able to complete these levels, don't take a trade for the day. Mark important levels. What is your entry? What is your exit? What should be your stop loss? If you don't know these 3 values, never ever take a trade. Wait for confirmation. Always wait. Don't preempt. Don't think the market would don't think that the market is very close to 23,990. It will breach 24,000. Oh my god, I'm going to miss the trade. It's okay, you miss it, but it's not okay if you end up hitting a stop loss just because of your impatience, right? Wait for the confirmation. Now how do you confirm? Use indicators. You are no god, we are no god. Use indicators, 2 or 3 enough. It will tell you, okay fine, confirm. You have your own set of rules, okay fine, then you take a trade. Execute with discipline. Now you have entered a trade, there is too much of noise. Someone is telling you have entered a long trade, someone is telling the markets will fall now. Although it has gone from 100 to 103, you get tempted. Okay fine, let me book this because this person is telling that the markets would fall. Or there is just a news coming in and the anchor is shouting that there is an earthquake which has happened in Delhi or some other place. Understand, every news will not move the market in the way you want it to move. A good election result, probably a ruling government wins by a majority votes. People might have gone long anticipating that result 3 months in advance or few days in advance. On that result day, the market falls. This is without skipping a step. That will make you a process-oriented person. You will be more satisfied when you make money, and the consistency can be built only by a practical approach. So end of the session, probably I don't know how much time it took, but yeah, the market will always create noise. Your job is not to remove the noise from the market. It is to remove the noise from your own decision making. This is where here it's where a lot of noise are created. So I hope this has been helpful. In the next week, if you want any other topic to be discussed, just put that in the comment section, or else I will come up with my own topic, so that these sessions would be big enough. And if you are till now with me, do give a like, do comment whatever your thoughts are on this topic, and do subscribe to the channel. Probably you're not paying anything, but yeah, your subscription would help me, would encourage me to come up with more such videos every week. Thank you, and you have a great trading journey ahead. Bye bye.